So let's go through a concept that you could use and add to your trading every single day. So what we'll do here, we will be drawing out our session highs and our session lows. So here's the Asian session, this is the Asian low, and this would be the Asian high. Now, what I want to explain to you guys is this works well on a lot of pairs that move in London, like gold, GJ, and so on. Look how price reacts in the London session to these levels. So firstly, you've got London kicking in here, around about here. We sell off the Asian high to the Asian low, which is actually a trade. But if you want to make the rule only trade post open, that's also okay, because you'll see what we get. You get a buy off the Asian low. You'll only be selling off the Asian high and buying off the Asian low. So what you get is when the open comes, this is the open here. In this area here is when the London open hits. We go all the way to the Asian high and sell off the Asian high back to the Asian low and more. So you could obviously, depending on the stop loss you want to use for futures or for currencies, whatever it is, you could sell towards the Asian low. Or you could go into higher structure and you could target the next level. So the next level would be something like this. And this is when you get very high RR trades. So this is a 9 to 1. Depending on your stop loss, if you use the 10, 10 is a bit big looking at that structure, but if you did that, you would still get a 4 to 1. So basically, what you could also notice then is this now becomes the London high, which we didn't tap into, and then this becomes the London low. This area here is the London low, and then we have, I'm going to draw this as a zone because it doesn't always hit exactly at the, and then look what happens in New York. So New York open is here also, just pre-New York open. Okay, so pre-New York open, we bought off the London low, and this area here is when the New York open actually is, and we continued back up to, not all the way to, but to the London high. So this would have been your trade. You could have entered exactly at that level there. Stop loss, give it a bit of room below. You could target there, or you could target there. You definitely wouldn't be losing money on this trade regardless of how it goes, because you can see your stop loss would be at break even for now, so you'll be risk free. But it depends on how you want to target. The probabilities are that price will continue up into the London high, and then so on and so forth. You do the same thing the next day. Doesn't always work, so you need to identify structure and when to use it. You can combine this concept with supply and demand, imbalances and these sort of concepts, and you will see a lot more consistency in your trading.